post numbers. Reema is here to tell us how the numbers look this time. Reema, good morning.
Hi, good morning. So it's a big beat on revenues and margins for HCLTech. The company has reported a top-line growth of 5.9% in dollar terms. Sequential revenue growth in constant currency terms is a growth of 6%. Estimates were for a 4% growth. Margins have expanded by 130 basis points to 19.7%, again, ahead of what the street was anticipating. And revenue growth for HCLTech has come in ahead of the pack. So at a time when most of the IT companies have reported a muted top-line growth, HCLTech's top-line growth of 6% stands out. The company has also narrowed its revenue guidance band for the full year, but that comes in line with street expectations.
All right, and you can catch the management at 9:30 a.m. today on Bazaar later on the show. But Reema, tell us about Wipro as well.
So Wipro, to start, let me tell you, the ADR was up 17% on NYSE on Friday. Wipro has beaten muted expectations. The company's top line has fallen by 1.7%. This marks the fourth consecutive quarter of a revenue decline. But the revenue decline was not as steep as what the street was anticipating. Even on the margin front, despite a wage hike impact, they've managed to maintain margins at 16%, beating street expectations. Two key takeaways, from the internals of the numbers. One, they have a dependence on the consulting business, and that is showing you some signs of improvement. There is a double-digit increase in the company's Capco order book, which basically means the consulting order book, and that's seen as a lead indicator of macro demand. And secondly, the management, when we chatted with them on Friday, also said we are seeing green shoots in discretionary spending. So the street likes that statement.
All right, that's Wipro and HCLTech. From IT to telecom. We're talking about Jio next, which is eyeing assets in Sri Lanka. Reema, back to you.
So Jio is one of the three parties interested in acquiring Sri Lankan's national telecom company. It's called Sri Lanka Telecom PLC. Now, the Sri Lankan government wants to divest, privatize the company. So on the 10th of November, they had said that, they put out proposals, and the last date for submission of their interest was on 12th of January. So 12th of January was just last Friday. And after that, the Sri Lankan government has announced who the three parties are interested or who have bid for it. And one of them is Jio Platforms. So Jio going global.
All right, thanks a lot for that. Well, Mangalam is joining in to give us the news on Tata Consumer this morning. Mangalam, over to you.
Well, when Friday everyone was done with their dinner, Tata Consumer went ahead and walloped two companies. One was Ching's owner Capital Foods for around 5,100 crores, and the second was Organic India for about 1,900 crores. Organic India is the foods arm of Fab India, which does packaged teas, herbal products and health supplements as well. Importantly, both these companies, Ching's company Capital Foods has a revenue of close to around 750 to 770 crores and margins upwards of 20%. For Organic India, the revenues are closer to 400 crores with margins between 7 to 18% itself. So on an arithmetic basis, this would add around 8 to 10% to the company's revenue. But both these companies are value accretive and margin accretive for the company itself. These acquisitions have been done at a valuation of 6 times price to sales. Tata Consumer itself trades at around 7.5 times. They're done at 35 to 37 times EV to EBITDA, and Tata Consumer itself trades at around 54 times. So these are also valuation accretive because they've been acquired at a slight discount to Tata Consumer's own valuations. Importantly, there's massive scale. As we spoke to the management, and they've said that Capital Food with margins and synergies can actually do close to around 30% EBITDA. Their revenue can grow multifold from current levels, even organic. And both these deals will be EPS accretive in year 2 of the acquisition. Tata Consumer, as a stock, has been doing extremely well, is at a record high, but this deal is positive, expected to open in the green, and maybe, perhaps, then see some profit breaking.
Okay, thanks a lot for that. Well, back to Reema now to track Just Dial this morning. Reema, how did it look?
Well, the key highlight is the margin expansion. So the company's top-line growth is okay. It's about 1.7% quarter-on-quarter, 20% on a year-on-year basis. But look at the margin expansion. Margins have come in at 22.8%. This is an over 400 basis points expansion on a quarter-on-quarter basis and about a 10 percentage point increase on the year-on-year basis. And the company's margins have been on an upward trajectory. So I think this is one of the key metrics that the street will focus on.
All right, Reema, thanks very much for that. Sort of power pack day for Reema with IT telecom both kicking in. Avenue Supermarts is the next one we're talking about with numbers coming through. Mangalam is back with us with more. Mangalam, morning.
Well, largely in-line numbers coming in from DMart, but there are a few positives, and that's something that the street will like. Why is that? Revenue, the company had already told us that 17.3% is the growth that they've seen in their standalone revenue. The consolidated revenue too has grown at a similar level itself. Gross margins have remained slightly stable. EBITDA has grown at 16%, and that's where the mild operational beat has come in, as the street was wondering that if the product mix deteriorates further, that could impact their margins. But there, the company said that the contribution from general merchandise and apparel have improved, and trends are encouraging post-Diwali. E-commerce business is doing well too. The losses have narrowed. The revenue has grown upwards of 20%. And the stock actually, after their third quarter update, has seen a correction of almost 6.5%. So expect it to bounce back a little bit today.
Okay, thanks.
Okay, all right. Thanks a lot for that, Mangalam. Well, let's hop across to Vivek on the back of the big win for BHEL. Vivek, morning.
Well, good morning. It's been a very strong year, and BHEL is all set to end FY24, with some of the strongest order inflows it's ever seen, at least in the last decade. So what's actually happened is that it's a confirmation of the news that's been reported quite widely. So NLC's Talabira thermal project, this particular award for the construction of the EPC plant has gone to BHEL. Remember, the letter of award has been received. It's a 3 into 800 megawatt power plant, and the scope of work as far as BHEL is concerned is all encompassing. So the company would be supplying the equipment, the erection as well as the commissioning, as well as civil works. All of this would be done by BHEL. The size of this particular contract is well in excess of 15,000 crore rupees. Also, one thing to keep in mind today, BHEL is actually in the F&O ban list today. Order book at the end of H1 was over 1.14 lakh crore. Order inflow till H1 was close to 33,000 crore. But it appears as though, FY24 ending, it will be a lot higher than that given the slew of order wins it has received in Q3 so far.
All right. Thanks very much, Vivek, for that. Well, Anantraj, there is a QIP coming, and Sonal is here with details on this one. Sonal, morning.
Good morning, Prashant. Well, Nimesh had highlighted in the D Street Chatter that this would come by, and this is now official. They will be raising funds via QIP. The size is around 500 crore rupees, and to decide on the indicator price, they do have a meet on 18th of Jan. But sources are suggesting the issue price could be around 296 rupees a share, which is a 10% discount to Friday's closing price. This would mean a dilution of around 5% post-issue paid-up equity share capital. But yes, the stock will be in focus because of this huge fundraise that they are planning.
Okay, all right. Let's wind this down then. Upasna, tell us some more stocks in the news.
Well, first up is Anand Rathi Wealth. The private AUM increased by 15% sequentially, and the total AUM stood at 55,057 crores. Mind you that it surpassed the FY24 guidance given by the company. That is around 51,000 crores is what the company had guided for in terms of AUM. Well, the company has achieved 77% of its FY24 guidance in 9-month FY24 itself in terms of revenue and PAT. And 9-month FY24 revenue stood at 555 crores and PAT stood at 169 crores. Net flows also grew by 41% on YoY basis. And in terms of Q3, it was nearly about a flat growth in terms of revenue, and even PAT also saw an uptick of just about 1%. The total expenses of the company sequentially were down about 2%. Now, next up is LIC. The company gets an income tax demand notice worth almost 1,370 crores from income tax authorities of Mumbai.
All right, thanks a lot for that. Plenty of stocks in focus. Here's a quick recap of our top stocks. Stocks with positive news flow. There's HCLTech, Wipro, Reliance, Tata Consumer, Avenue, Supermarts, BHEL, Just Dial, Anand Rathi Wealth and Anantraj, while only one stock with negative news flow because of that IT expense that has come through for LIC. So that stock could be in the red this morning, a sentiment overhang over there. But crude has been falling. There's lots that's happening with the Red Sea conflict, and things are just escalating over there. Manisha Gupta is joining in to give us a roundup of all the action there. Manisha, all of that is, assumed center stage now in global geopolitics. But tell us what's happening with crude?
Thank you for that, Sonia. Well, yes, Friday was a very strong day. We saw WTI at 75. The Brent prices crossed above $80 a barrel as well. But since then, there is some profit taking that we have seen. One, the markets believe that there may not be an interest rate cut in the first quarter, and that's weighing on. The US dollar is on the stronger side. The demand from China and US is still on the weaker side. So there is this concern about oversupply going forward. While, of course, Red Sea is the center stage, but we haven't seen that a premium premium come into the markets or prices very strongly, it does come as a knee-jerk reaction, but there is no sustainability on that yet. In the meanwhile, you also have seen Citi lower the Brent price forecast. They're also expecting a 1.2 million barrel per day of a surplus in this year in sense of crude, and that's weighing onto the markets. So now Citi has put an average for crude prices at 70 for this year and 60 for 2025. And we've seen other banks and brokerages also do similar revisions, and that's what's weighing onto the markets as of now.
Okay, thanks a lot for that. Well, let's slip into a quick break. On the other side, Prakash Diwan will join in. Lots of stock talk lined up, so don't go anywhere. Also, Subir Malhotra, the Executive Director and Chief Financial Officer of Capacity Infra Projects, will join in to discuss their recent fundraising via the QIP route.